again. Joining us is Scott Bauer. He is the CEO of Prosper Trading Academy. Scott, we're watching the broader markets today. It's certainly down on concerns about global economic growth, particularly with what's coming out of China as well as Hong Kong. And yet we're seeing oil push higher. What do you see behind the divergence?
Well, I think today what it really is some of the geopolitical concerns, because overall that global growth demand, which you just mentioned, that is really front and center. That's really what is, has led oil lower and really has those headwinds on there. But we do have some geopolitical tensions. We see the unrest in Hong Kong. We see what happened overnight with where China fixed the yuan was lower than we thought. That's why the global equity market is down today, maybe giving a little bit of a boost to oil there.
How much more downside do you see in the short term, given that it doesn't look like those two situations you just mentioned are going to improve?
I actually think that we could break 50. I know I'm probably in the minority, but in the short run, barring any sort of escalation from a geopolitical standpoint or any escalation, with something with perhaps another tanker with Iran or anything like that, I think we could really be sub 50. We're going to get a report out later from the IEA about, what the stock surplus or draw is. They're expecting a draw again. Surprised last week that there was a surplus. I wouldn't be surprised to see a surplus again.
Let's talk about the company in focus in the space. Of course, we're talking about Saudi Aramco striking that $15 billion deal with India's Reliance Industries. Aramco has made it very clear they want to be able to pump out 10 million barrels a day by 2030. How big of a lift is this deal likely to provide in terms of refining capacity?
Well, I think what it does for them is it just expands that, as you just said, and it allows them other resources now, let's say, bringing it in-house from the refining standpoint. So, the crude output is not the issue for them. It's the refining part of it. So now having this, let's call it in-house, certainly eases that quite a bit. We'll have to see what happens with the IPO, whether it actually gets off the ground next year, maybe out in 2021. But I think that the street, if you will, is going to like a move like this. And I think it makes sense for them to diversify a little bit.
Yeah, let's talk about how this could affect the IPO. As you point out, this has been on again, off again for several years now. Yep. And the company we've seen has really been on the hunt for deals in some ways to get the buy-in from global investors. How does a deal like this kind of open up the strategy for this company?
Well, I think, again, what it does is let's call it diversifies their portfolio. So any global, investors now looking into it, okay, now they have an arm of Saudi Aramco that obviously is not just going to be run by the Saudi government anymore. They have another arm that's going to help them get to those maximum production levels that they want. Going to probably reduce costs overall for them, and I think it's a really good move. And God knows they have all the cash in the world, right? They were flush with cash, and that's why they made this purchase.
Yeah, no question about that. All right, Scott, always good to talk to you. Scott Bauer joining us from Chicago.
You as well.